morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at first quarter fiscal results of two of our homegrown and home-owned banks on the Trinidad and Tobago Stock Exchange. Of course, we're speaking about Republic Financial Holdings Limited as well as First Citizens Group Financial Holdings, or let's call it First, for this session. Now, both groups would have reported fairly significant improved earnings over for their first quarter earnings results. Let's take a look at how both groups would have fared and what investors might expect in the coming quarters ahead. Turning firstly to RFHL or Republic. For that first quarter ended December 2025, the group would have reported an earnings per share figure of $3.67 per share, which was a 9.6% improvement from the $3.35 recorded in that prior comparable period of 2020, fiscal 2024. Net interest income was up 8.3% from $1.34 billion to just under $1.45 billion. Overall operating profits up 12.8% from $888 million to just over that $1 billion mark in the first quarter. Profit attributable to equity holders increasing that 9% from around $547 million to just under $600 million. So certainly a very strong performance in that first quarter by RFHL. When we take a look at income trends, we can see it has continued on its upward trend over the 5 past comparable periods. Again, net interest income in this orangish color up just about that 8.3% to $1.449 billion with a commensurate roughly 8.1% increase in other income, increasing in that greenish segment from 530 to just about 573 million. Again, consistent and positive trend in terms of income for RFHL over the past few comparable periods. When we take a look at profit before tax contribution from a geographic segment, again, one of the RFHL's emerging strengths and improving strengths has been its regional diversification. We can see that there were some notable changes, but overall fairly positive at an aggregate level. We can see Trinidad and Tobago, for example, in that yellow segment, increasing just about 1% in terms of PBT contribution from 945 to 955 million. Barbados, fairly significant decline from 112 to 43 million in that blue segment, roughly 60% decline. Suriname also down just about 23% from 52 million to 40 million in profit before tax contribution. However, this was more than offset by significant improvements in the Eastern Caribbean, up around 30% from 87 to 114 million in profit before tax. Guyana up also a fairly significant 35% from 109 to 140 million. Ghana swinging positively as well, up just about 65%, in fact, in that red segment from 40 to 66 million. And Cayman Islands also chipping in with significant growth, up around 16% from 106 to 123 million in profit before tax contribution for the group. So again, overall, some variations in terms of performance regionally, but overall an aggregate positive improvement in terms of that quarter-on-quarter performance. Now, when we take a look at from a valuation perspective, we can see that Republic is trading at that price earnings level of around 7.5 times, which is on the cheaper end of the spectrum for banking sector stocks. In fact, the sector average is around 9.3 times, and RFHL is offering a fairly generous dividend yield on a trailing basis of around 5.8%. Compared to that sector average of 5.4%. So certainly one of the higher dividend yielding stocks on the banking sector, which has in fact repriced to the upside over the past few years, with dividend yields increasing in general, as we can see in this particular illustration. So again, at that price of 103.25, Republic is trading at that price earnings ratio of 7.5 times, below the sector average of 9.3 times, with a dividend yield of 5.8%, above that sector average of 5.4%. So with higher revenues in mind, that continuing and strengthening geographical diversification in mind, also relatively attractive dividend yields and general valuation multiples. But of course, with market uncertainties prevailing, particularly that asset-based levy related to Trinidad and Tobago banking assets, Bourse is maintaining its overall overweight rating on RFHL for the time being, with a watch outlook. Turning very quickly to FCGFH or First. Well, for that comparable first quarter period of ended 2025, the group would have reported an earnings per share figure of $1.05, which is a 10.5% increase from the 95 cents recorded in that prior comparable period. Driving this performance was a fairly modest increase in net interest income, up 3.3% from 522 to 540 odd million. However, total net revenues increased a fairly significant 16% from 695 to 807 million. Overall profits for the period increasing that 9.7% from 240 million to just about 263.3 million. So again, very strong showing by one of our domestic or homegrown banks rather. First, we can see that from a profit before tax contribution perspective, there were some notable changes as well. Retail and corporate banking declined just about 15% from 264 to just about 226 million in that Redis segment. This was more than offset by an improvement of almost 50% in treasury and investment banking profit before tax contribution, moving from 139 to just about 207 odd million in profit or PBT contribution, and a fairly flat performance or stable performance in that trustee and asset management segment, around 14.2 million. When we take a look at the balance sheet trends or total asset trends for First, we can see that there were some notable changes over those comparable quarters, most notably loans to customers growing just over 9% from 21.8 billion in that greenish segment to 23.8 billion, with some fairly stable trends in the other segments, including investments, cash holdings, as well as other assets. Again, at a price of $40 for First, the stock is trading at a price earnings ratio of just about 9.9 times, which is broadly in line with the sector average of 9.3 times, and offers even more generous dividend yield of around 6.3% compared to the sector average of 5.4%. So with that strong revenue growth in mind and improving earnings, a very attractive dividend yield in fact, but again, overlaid by those particular market uncertainties which could affect the banking and insurance sectors. Notwithstanding those uncertainties, Bourse is maintaining an overweight rating on First for the time being with a watch outlook. Well, that's it for this week's edition. For more information, you can give us a call at 2BORSE or 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.